to our December meeting, Pension Committee meeting. First on the agenda, apologies.
Apologies received from Councillor David Thomas.
Okay. Thank you. Oh, and welcome to Aon, of course, Kenneth and Luke. We've got David from the Pension Board, our Pension Board Chair. Welcome. Item 2, declarations of interest. I'll declare I'm a member of Parish Pension Fund. Any other
Yeah, likewise, Chair.
So,
Adam, yeah, Adam, roll. Lovely, thank you very much. Item 3, minutes of last meeting on the 22nd of October have been circulated. Are you happy with me to sign the correct record? Propose a seconder, please. Thank you, Adam. The seconder, please.
Yep.
Thank you, Harold.
Yeah, happy.
Great. Thank you very much. Item 4, pension board minutes. I see it. David, so over to you.
Thank you, Chair. Yeah, there are several matters which we discussed as a board which are on your agenda today, so I won't go through those. I think if I just pick a couple of the other things up from the minutes. Minute 8, of course, is where we mentioned that the Chancellor had made a Mansion House speech on the 14th of November. It was very happening at the time, and that was regarding investment pooling. And she said that LGAPS funds must pool all assets into an FCA regulated structure by March 26. And we'll be discussing that later in the meeting, I'm sure. Of course, explicit reference was made to Wales in the consultation, and I think we've had some clarification that there will be some form of way forward for Wales, but we're not sure exactly how. Perhaps you, Chair, can tell us more after Tuesday's meeting on that.
Yeah, I think me and Chris discussed it. So I'll leave it to Chris what we can and cannot say. There's a lot of work going on. And I think they are going to involve you on Tuesday's meeting. They will be involved in the pension board as well. There's a lot of work to move forward and such a short time scale. So, yeah.
So on that point, the board asked an additional risk be put in the register regarding pooling 100% of assets and the requirement for WPP to become FCA regulated, and that's later on the agenda. And the risk register was probably the main cause in the board meeting, and the investment risks. And we're doing a lot with investments today, we went through those risks in quite detail, really. And we asked on Invest 7 if that one could be updated to include pool operator and fund allocators as well as asset managers, just to update the risk. And so a couple of them we thought the Invest 09, we thought the MiFID one was probably something which was big at the time, but perhaps more of a thing for individual councils rather than pension funds by now. The Invest 10 as well on government bonds. We had the session with Aon about the valuation a week or two ago, and they mentioned there that they no longer use bond yields for the discount rate, etc. And so as a board, we thought that the return on bonds could be subsumed within the general Invest 01, which was the investments returns, and didn't need a risk on its own in the register. So we asked for that one, so for the committee to consider archiving that one. And the ESG was the other one, which we had a discussion on, and that there are other ESG factors in addition to climate change, things like social aspects and the world conflicts going on. I think Chris has given attention to those in the item later on. So yeah, I won't go through every part of the minutes, but I'm here to answer any questions, Chair.
Thank you, David. Any questions? Oh, Karina.
Well, this just because I've been to this LAPF conference and there's a lot of emphasis on nature and developing metrics for nature harm evaluation. I don't know what you call it. And whether that could be incorporated into the risks.
Yeah,
Chris,
I guess give some thought about how we can incorporate any nature-related risks. I guess we picked up in part through the a climate-related risk, I guess. But when it's tied to nature capital, I'll have to give some thought on that one, Karina. So you can leave that one with me. I'll consider it. Yeah.
Okay, have a Karina. Adam.
Well, I'm going to come on behind that, Chris. So over in the County Council's risk register risk lists both climate and nature in the top 4. And I know there's a question gone back to say, look, can you give more detail on that because you downgraded it? Can we? So I just maybe there's a how do we manage risks across the organisation on the two, because the two do interplay, a little bit. So it's just to make you aware that thought piece is going on. So well, you go away and do some thinking over on the County Council side, somebody else is doing exactly the same.
That might be helpful. Yeah. Yeah. Thank you, Adam.
Yeah, I think we'll take that on board. Thank you, Adam. Any more questions? Okay. Thank you. Do we note that? Do we have to note this? Are we happy to note the proposal sector? We note the pension board minutes, please.
Yeah, happy with that, Chair.
Thank you. Seconder. Thank you, Adam.
Yeah,
Okay.
well, thank you.
Very happy. Thank you. Cheers, David. Thank you very much. Item 5, Chair's announcements. I think I had on the 26th of November, but I think we've had a few meetings. We had a meeting since then, haven't we? I had a meeting, a Teams meeting with the SAB, or Scheme Advisory Board Chair, Roger Phillips, very much concerning with, and we had the minister, one of the pension ministers there in the meeting, and I think it was a very interesting meeting, very much about the pooling, the Branching House speech, and it was very interesting and what way forward. I think I have said this, the Wales pool, I think, are far further forward than the other pools in the. They say that the size of pools, but they haven't invested in it as much. They say it might be a 50 billion, but they're putting all the funds together. It might be 50 billion, but it's not 50 billion in the pool. So it's quite interesting how well we are doing as a WPP. So it was good. We had JGC on the Tuesday, the full day's meetings, a lot of work. I was quite tired at the end, a lot to take in. Well, especially all this Mansion House and all the changes we've had, it's moving forward fast, and now time scale is 12 months. So we'll see, but Chris will be updating what we can say later on. Well, that concludes my report. Karina, I did see your hand up.
Sorry, I was just looking at how everybody's pooled in the Welsh Pension Partnership, and Clwyd is really low compared to everybody else. Are you going to have a chance to tell us why?
Chris, do you want to explain which
I can
reason?
pick that one up. It's probably not appropriate for me to comment on another pool as to why, but this essentially to do with their strategy. They've got a lot of long-standing private markets investments, and private markets investments tend to be long-term. So you invest at the start, and you're not able to come out for a certain period of time. So pooling has come along after they've made these initial investments, so they haven't wound down yet to be able to bring them in. So essentially, they want to avoid a fire sale just to satisfy pooling. It'd be too expensive for them. So it's their strategy, basically.
Do you think they're able to transition for 2026, March 2026?
This is one of the things they're going to have to try and work out how they might do that.
Thank you.
And the trouble is, there's always a cost of coming out early, isn't there, Karina? Yeah,
and we can maybe just pick that one up now, because I was going to talk about it later on. But obviously, we've got a consultation to respond to. I think it's important that we as a fund, and I'm sure, hopefully I get support from committee on this, is that when we respond to the part about pooling assets by the 31st of March 2026, we say you've really got to avoid a fire sale. We don't want to be selling assets at cost just to try and satisfy this date. So we need to put across a strong argument, a reason as to why that might not be the best thing to do. So I was going to raise that later, but I'll just make that point now.
Yeah, if we flood the market, the price will drop on the Karina. So yeah, we need to be very careful. Okay then. Thank you. I can see we got the meeting dates for next year, so put them in your diary. 2025 will soon be here and soon be gone. Okay then. Item 6, administration and governance report.
So it's
Great.
thank you very much, Chair. I'll share my screen if that's okay, so I can take
Brilliant.
people.
Yeah, that's great. That's
Hopefully that should be coming through now. Public agenda. Okay. Thank you. Good morning, everybody. Apologies in advance for the length of this report. It is quite substantial. There's an awful lot going on in terms of the administration and the governance side of things as well. And the next two items were incorporated into one report. Because of length, I decided to split them out, and I acknowledge the consultation about the LGPS being fit for purpose as a separate item. So we'll come on to that after this one. So this is just the regular update for committee on what's going on in the administration and governance world within the LGPS. We already touched upon the fact that there's a call for evidence launched in September, which the fund responded to, and the response is included in the next item. Hopefully you had the chance to see that. Again, the government are looking at the way that pensions industry is set up, how it functions. I think they've used the term fragmented to describe some of the LGPS or their views on the LGPS and the pensions industry. So they're really looking at how pensions work in the UK. That's why they've launched this call for evidence, which we responded to, and then the Mansion House speech and some parts in the budget as well, which I'll pick up on in a second. But we'll get into more detail in the next item on the consolidation of pools. The chair has already updated you that he attended a meeting with the Scheme Advisory Board on the 26th of November about this. So the next important thing I think that committee should know about is out of the budget, there are a couple of points that I just wanted to make you aware of. And it's to do with changes to the way that the government are going to treat certain aspects of pension industry and further actually. So the first change they're implementing is on inheritance tax. Now that will have an impact on the LGPS because at the minute, if somebody's made a nomination for a death grant, for example, we can pay that immediately without it having to go through estates, which can speed up the process and beneficiaries can receive the money a lot quicker. This change is proposing additional communication and additional steps in the calculation of death grants as well. So I'm not into detail. My administration team would be the ones who'd be able to explain the detail to you. But ultimately, what it's going to do is it's going to require more communication, more involvement of the administration team in doing more detailed calculations so that we can work out how much needs to be paid correctly. It also might have an impact on the team in terms of working with HMRC when it comes to any tax being payable. We'll probably have to calculate that and pay it across and then reclaim it. These sorts of transactional processes that we now have to consider, which we haven't had to consider before. So whilst we're not expecting it to kick in very often, there are some additional complexities now that the team will have to be aware of and build into their processes and make sure they're thorough when they work through the death process. So I just wanted to make the committee aware of that change. The next one, which is quite an interesting one, is to do with this PSNFL, Public Sector Net Financial Liabilities. And you might have heard some talk in the press about the government reshaping the calculation that allows them to determine how much they can borrow. This is linked to that essentially. And what it's doing is it's including including the funding level of the LGPS within how much they can borrow. So whilst the LGPS is in a good funding place, it potentially may help the government borrow more. So it's interesting that they've now brought in the funding position of the LGPS into how much they can borrow as well. So you might have picked that one up when you were reading through the papers, but I just wanted to make committee aware of that potential implication as well when it comes to the LGPS. There's no questions. I shall carry on. I can't see any hands up. I can only see 4 faces on screen now. So if any hands go up, you'll have to shout, Chair. If that's...
I'll shout. Oh, that Hugh.
Yeah. Or mute you.
Mute you.
Yeah, sorry, Chair, again, Chris. That doesn't mean that there's a liability on the pension funds, does it? It's just included in the calculations for the borrowing.
Yeah.
Yeah.
My understanding of it is basically we will be, or the LGPS will be a figure in a spreadsheet somewhere,
Right.
which helps them determine. So I don't think it puts any additional strain on us, but it does. If the funding level dips again, that might affect how much the government can borrow. So there is some sort of linkage to it when you look at it that way. Yeah.
Okay, thank you.
Thank you.
Okay, thank you very much. 3.2 is picked up in the next item. 3.3, just to make committee aware that every year we have to submit an annual return to the pensions regulator. We have to do it by a specific date. And we did it on the 11th of November this year, ahead of the deadline, which was the 20-something of November, I think. So just to give committee assurances that it's been done. McLeod, it's ongoing. It's a real challenge for the administration team. But every new calculation that goes out the door, so for example, every retirement or every transfer or everything that the team pay now has the McLeod remedy built into it. So we know that benefits we're paying have been through the McLeod check and they're all been verified and they're all correct. It's the historic ones that have been calculated previously that we have to revisit, which is where the bulk of the work it now sits. So it's a case of working through these as we can. So the team are looking at those to try and revisit all those historic cases. 3.5, just for information, the Consumer Price Index figure at the end of September was 1.7%. Historically, this is the figure that's used to work out the pensions increase applicable on pensions from next April. So whilst we await official confirmation from the government on this, we're expecting pensions increase in April to be 1.7%. But can't say for definite until we've had confirmation. That's obviously come down quite a bit compared to the previous couple of years. Which, when you think about the impact on the pension fund, is a positive impact really, because it's bringing down the value of the liabilities. The next section all kind of rolls into one really. This is just to make the committee aware or bring you up to date on the importance that the government is placing on pension dashboards. So this is an initiative where, apologies if I'm repeating myself, I do like to give a high-level review at each meeting. So a pension dashboard is essentially where a pension saver can log into one portal and access all their pension benefits on one screen, rather than having to log into 4 or 5, 6 different portals. This dashboard is designed to do the work for them. The DWP have issued a statement saying they're committed to the previous government's timetables, so we don't expect those to change. But there's been a lot of communication from the pensions regulator on this as well. The pensions regulator is taking this very, very seriously. And as such, they launched a webinar a week or two ago, which I attended, on what we need to be thinking about as a scheme to be ready for this. So we need to connect to the ecosystem by October 25. So we're just under 12 months to make sure we're in place now. We met with the pensions software providers over the past couple of weeks to look at a couple of facilities that are available, essentially based around data, because what the system will do is it will use matching data. So when they log in, they might put in a national insurance number, for example. That will then go and interrogate our data. If it finds 100% match, it'll pull out the pensions information. But obviously, if the NI number doesn't match, they might go into forenames, postcodes. You know how matching works. So it's important for us to make sure our data is clean, to make sure that we're able to deliver as many positive matches as we can. Because if we don't, there's a risk that the person might have to get in touch with the fund to say, I've tried to log into the system, it's not working, and that can tie up our admin team. Because this is new, we don't know whether that will happen. We don't know the impact this is going to have, or any potential impact this might have, because it's never been done before. So it's important that we get our data in as good a place as we can, ready for launch. And it is. We did a data cleanse with our software providers in 2023, and our data scores were really, really good. There was very little to be concerned about. Our biggest gaps in our data were around email addresses and middle names. And neither of those two are what it's going to use to match data. So the data matching set is actually in a really good place. But that, as I say, that's probably over 12 months old, that data cleanse now. So we need to be working through and make sure we're ready for next October. So we met with the pension software providers in the last couple of weeks to look at their dashboard tools. And there's a couple of things that we can do to make sure that our data is ready for it. But I just wanted to make committee aware that the regulator's taking this very, very seriously. So we have got the right people looking at this to make sure we're ready for it for next October. Number 5 is where we'll need some decisions today from you, if that's okay. This is to do with the risk register, as the pension board chair touched upon earlier on. So I've made some adjustments to the risk register based on the comments, and those are listed in front of you. I don't know if you've had the chance to have a look at them yet, but a lot of it is around changing the narrative to make sure that our narrative is more detailed. So for the Invest 0008, we've updated the commentary to address that changes in legislation can also place an additional risk when it comes to timetables. The 31st of March, for example, is a risk that has now been foisted upon us. So try and scroll down to it. I'm trying not to scroll past it. It's quite helpful being able to work through the risk register with the pensions board, because they're almost effectively acting like a risk subgroup for us. It really gives us an opportunity to deep dive into these. So Invest 008. I've essentially just updated the narrative up here to say that the pooling of pension fund assets with the other LGPS pension funds, including any changes to legislation related to the pooling of assets. So it's not specific. It's quite high level wording deliberately, because I don't know what they might change in 6 months' time. So that's the wording that I've used to reflect the recommendation from the board. Happy to consider any changes to it, but I tried to deliberately keep it high level because it's a catch-all essentially. So that's the proposal. If you're happy with that amendment to that risk, then it's over to committee to approve it essentially. But that's considering changes to legislation that happen that we have no control over really. So happy to take any comments or questions on that.
Can't see any questions. No, I can't see any hands, Chris. Thank you.
Yeah, the only plus thing is, you know, with
Oh,
things
Arnold.
do change. Yeah, no, the plus thing is if things do change, well, we can adjust
Yeah.
our comments accordingly, can't we? Really?
We can, yeah.
That's
Yeah.
As we've done here, well, we've acted pretty quickly on this one. As it happens,
yeah.
the pension board was after the Mansion House speech, so we were able to look at it. So timing was quite fortunate on that one.
Yeah.
I think it could be adjusting a lot of risks in the next 12 months. Things will arise.
I agree with Chris's approach to be a bit vague on it because it's so fluid at the moment, isn't it? So
Yeah.
our comments were immediately after the Mansion House, really, and things are going to change with the response to the current consultation. Probably there'll be sort of tweaks to things,
and we might have to revisit it. Absolutely, you're right. Yeah, you're right. Invest 009 was this MiFID directive that the pension board chair touched upon. This is a historic one that's been on there for some time, and it was very important when it first came out because what this means is if we lose our opting up status under MiFID 2 as a pension fund, we lose our institutional investor status. Basically means we can't invest in the products we currently invest in, cost us more, less options. So it is a big risk, but we have got well-established processes in place. And we do have questionnaires to complete from our investment managers from time to time because we have to evidence it. And one of the questions that they ask is a simple one: how much training have the committee had? Because they need to evidence that as a decision-making board, you've got enough training and experience to be able to make these appropriate decisions. Obviously, we have Aon and our investment consultants who help you with that. So if committee are comfortable, we had a discussion at board about this, and we felt that we could probably archive this one now. We've got well-established processes in place, and it hasn't been an issue for some time.
Okay. You happy with that? The suggestions? Okay.
Yep.
It makes sense, doesn't it? Okay, thank you.
I'm sorry.
Queen, where's Queen? Oh,
Get my hand up.
didn't see.
I
There you are.
didn't. I'm sorry. I don't totally understand this markets in financial instruments directive. Is it just saying we're kosher?
It's basically providing evidence that we are a certain type of investor, because if we lose that status, then it limits the amount that we can invest in. We wouldn't be able to invest via WPP, for example, some of those funds, and it probably costs us more. We'd be an individual investor like you or I. We'd essentially lose our scale, so we'd become like an individual investor rather than an institution. So whilst it was very important when it first came out, because it was a big change to regulations, it hasn't really been an issue, but we do have to evidence it periodically from investment managers when they contact us to make sure that we are still an institutional investor, not just an individual investor. So it's the difference between those two different types of investments, essentially, Karina.
Thank you.
Good.
Okay.
Thanks, Chris. Well, thanks.
Okay, hopefully that one's okay then. Again, Invest 10, the chair of the board picked up on this one, that it's actually a subset of Invest 1. So if committee are happy, again, it was a duplication essentially. If they're happy, then it's captured in Invest 0001. Then we'd like to archive that one as well, please.
I think it makes sense. I think everybody happy on that. And
So
nothing to the contrary.
Yeah. Any comments, David?
Yeah, I propose that one be archived and kept as a subset of Invest 1, so I'm happy, obviously. But I think it's interesting. I had a discussion with Kenneth from Aon the last time we spoke, and I challenged them on the do we need so much in bonds, really? And he was quite bullish about the markets at the time, and I think reading online recently, he's been proved right, and bond yields are on the rise. So it's a good time to be in bonds. So the returns are pretty good at the moment, but you know they do vary the same as equities and property and other things. So there was no justification really for it by now to be on its own there. Previously, bond yields were used for the discount rate in the valuation, but as we heard in that training session, they use a risk-based approach now. So that justification for the separate risk doesn't exist anymore, really.
Thanks, David. Hugh?
Yes, thank you, Chair. Chris, what exactly happens when something is archived? Now, I mean, I know it is like in a library and what have you, but I mean, it doesn't go away, does it?
No, so essentially it won't appear on these printouts that I provide for you, Hugh. It still sits on the risk register that I can see behind the scenes. So if I need to reopen it to revisit it, that's absolutely fine. But when I present these presentations or these slides to you, it won't be on the list. So it'll be less for you to consider, but it's still there in the background. I don't intend to revisit it, but it doesn't mean that I can't revisit it if things change, basically.
Okay, thank you.
Thank you. Okay, all to you then, Chris.
Yeah, thank you, Chair. I think there's one more left. Apologies scrolling up and down. It was the quickest way I could think to do it. No, I've scrolled past it.
While Chris is scrolling, I think the thinking we had is that sometimes less is more, and it's easier to focus if you have less risks listed, and you can focus on the ones that really matter.
Yeah, I quite agree.
Yes, David, I can appreciate that point of view. Thank you.
Thank you, everyone. Last one that I've made an amendment to is Invest 12, and this is the comment around acknowledging that there's around ESG, environmental, social, and governance factors. There's more than just climate to think about here, and we've seen some real-world examples about areas of conflict and whatnot. So it's making sure again that the wording in the risk identified the risks associated with any investments held in these areas of conflict. So if I just scroll down, we'll just make sure that we're happy with the wording. Captures that. Again, it's left quite high level to try and be a catch-all situation. So I'm happy to be more specific if committee feel it's needed. Invest 12. So it's this one here. So the fund fails to adequately account for climate change, climate, including physical risk and environmental, social, and governance. These include risks associated with investments held in areas of conflict. So I've essentially added on that last section there and just tidied up some of the wording in the previous sentence as well. So it's trying to just identify that there are several different types of risks associated with ESG. It's not just simply a case of saying ESG, done. It's trying to be a bit more specific around the risks around all those areas. So that's the amendment I've made to that one, and I guess I'm asking committee if committee are happy with that wording of that risk, and if so, then we can go.
Adam?
So yes, I just put the phrase in geopolitical. So there are risks of climate and nature, and there are risks of conflict. I think one of the things that sits out there is where it's not quite conflict, but there's lots of geopolitical tension, and that's going to affect things like fuel prices and water resources and the like. So without going into the detail, I just wondered whether being able to include geopolitical risks as a single phrase allows us to unpack it at a later date when we're actually in the detail of this.
Personally, I think that's a fair comment, but if committee are happy with that, then I can make that tweak to include that.
Will committee be happy to put that tweak in?
I've got no problem with it.
Okay. Is that all okay to put in then, Chris?
I think so. I think it's a fair comment because I think it might have further reaching implications down the line, isn't it? So I think it's probably right to acknowledge the risk. So yeah, I'll add it into that one if that's okay.
Okay. Thanks, Adam. Okay, all to you, Chris.
Thank you very much. Apologies whilst I scroll back up. I keep getting a message on my screen saying I'm low on resources. I don't know if it appears in front of you, but my computer is struggling a little bit, I think. Okay, so moving on then. There's no new breaches to update committee on. The breaches register's there for your information, but nothing new added to it. So that is the end of that report, Chair. It's to say thank you and just a note and to approve those amendments.
Okay, thanks, Chris. I need a proposal to note the content of the report and approve amendments to the investment pillar of the risk register. Can I have a proposal, Secretary, please? Thanks, Harold. Thanks, Hugh. Are we happy? That's it. Okay, lovely. Thank you. Thanks, Chris.
Thank you,
Item
Chair.
7, update on national developments. There's a lot happening, as you know. It's very fluid, as David says. So I'll let Chris update what we can and cannot say. Okay.
Yeah. Thanks, Chair. Okay, we've had quite a few discussions about this one. Committee are aware that there was a Mansion House speech that took place on the 14th of November. Off the back of that speech, there was a consultation launched on the LGPS and being called whether it's fit for the future. With the government's eye on the LGPS and the way that we operate, essentially, in terms of investments and assets. It's important to stress at the start, this is only looking at the investments of the LGPS. It isn't looking at changing member benefits or the administration of the LGPS. It's simply looking at the way that we invest the money into the assets. Essentially looking at the way we pool. So obviously you'll be aware that we pool our investments through the Wales Pension Partnership. There are 7 other pools out there in the UK as well, doing the same thing at different scales and different speeds along the journey. So the government has acknowledged that some pools are doing things better than others, perhaps, different speeds, quicker, more in the pool in terms of percentages and whatnot. And they're trying to look at the way we do it as whether there's a better way of doing it. You might have heard talk about these mega funds and whatnot in the press, but essentially it's looking at the pooling side of things. So they launched this consultation, and at the time of writing this report, there were initial observations. Things have moved on a little bit since then, which I'll update you on. But there are a couple of key items which you need to be aware of, and the impact and the implication on these changes to the Wales Pension Partnership. So one of the recommendations in the consultation is that the pools have to be an FCA, Financial Conduct Authority, regulated entity. Now, the WPP is not one, and neither is Access or the Northern Pool. The model that the Wales Pension Partnership decided to go and take on when they set it up was on an operator-based model. So we hire in the expertise via Waystone, the pool operator, who run the pool for us. Other pools, for example, have created pooling companies, which themselves are FCA regulated, and they run the pools on behalf of their constituent authorities, their funds that pay into it. And that's the approach that the government prefers. That's the approach that the government wants us to move towards. I'll talk a bit more about that in a second. The other item has already been discussed as well, was that they expect funds to have pooled the assets in the pool by the 31st of March 2026. That's not very far away. And that does bring its challenges itself, and we touched upon it briefly earlier on. It's difficult because some of these investments are long term. So if the end date of these investments is after the 31st of March 26, what do we do about it? Well, you could sell the assets, but you'd probably incur a fee, early redemption charges, transaction costs, etc. So it's not a financially sensible thing to do that. So in the consultation response that we send to government, we'll have to say, look, we acknowledge that this date has been proposed. We're going to have to think about how we make this happen, because we can't, across the LGPS, have a fire sale of all our assets that are tied up, because it's just going to be expensive and not value for money. So that's another challenge. One thing the consultation does note is it does note, and it's bullet point 2 here, is that Wales is different. We have some of our own arrangements. I think it identifies the joint committees we have in Wales. I think it identifies some sort of the way that Cardiff run things, and Swansea. They have identified, which is positive, I think, within the consultation, that Wales is different. So there's perhaps an opportunity for Wales here to have a look at this and think about how we might best tackle this as Wales, rather than potentially looking at other options, potentially mergers with other funds, other pools. So that's where a lot of the focus has been since this was announced. Been several meetings of senior officers within Wales to look at how we best tackle these 2 main challenges. One is the FCA regulated entity. How do we move from what we've got into one of those? And pooling assets by 31st of March 2026. How do we overcome those 2 challenges? So there have been meetings held at WPP level, which includes all the officers from around Wales. I've been there, Jane's been there. I know that Peter's been at a workshop for the Joint Governance Committee that took place earlier in the week as well. So the chairs of the committees have been involved in some of this discussion as well. It's difficult for me to be able to give too much detail in a public forum, but there is a lot of work going on behind the scenes about how we might tackle this and what we're looking to do in terms of getting ready for this. So in terms of the next steps, we will want to respond to this consultation. The consultation closes on January 16th, 2025. So I've already started working on a response. One thing that I also should mention as well is that the consultation does seem to pick up the Good Governance Project. You might have heard me talk about the Good Governance Project over recent years. And that's essentially designed to try and make sure that we're all at the same level when it comes to governing LGPS funds. Some funds have been better at it historically than others. So this is creating a framework which we all have to meet, which creates a level playing field, which is good. So it's good to see that in the consultation as well, and we'll respond accordingly in the consultation to say that. So we've got to respond to consultation. We've got a lot of work to think about how we might overcome these two major challenges. And we'll also have to give some thought, I think, to the messaging for our stakeholders, our employers who pay into the scheme, and our scheme members ultimately might have heard about this in the press. You might have to think about how we communicate these challenges or this consultation to them as well. So I'm giving some thought to that at the minute. But that was about all I wanted to say at this point, Chair. I don't know whether there's anything you wanted to add, but essentially a lot of work is happening. And when the timing is right, we'll be able to make things more public, obviously. But at this point, we're just busy getting our heads down and working our way through how we might make this happen. So
Yeah.
hopefully that's been the detail that you need.
Yeah, I'll bring Errol in a minute because he wants to speak. But yeah, it's going to be a lot of work ahead. And Jane was saying, I think you're having weekly meetings. I think, and Chris, there's a big workload ahead. I think we've agreed as chairs we're going to have monthly meetings. We're tripling our meetings to accommodate this. I did ask a question on Tuesday. 12 months is not long, really, for what we got to do. And John from Hyman Robinson, who's advising us all this, he said it's doable and it can be done. This is a great opportunity for Powys, I think, to keep our identity. As I said before, we are the smallest. Keeping Wales, but we have an equal say, and it's, yeah, I'm very encouraged and hope we can work through this. There's a fantastic, enormous amount of work. Yeah, Jane's going to be busy, and Chris. Errol.
I'm a little bit confused, really, because obviously it's going out for consultation, but obviously, is it a done deal by the looks of it? Is it? You know, that it is going to have to go ahead, and at the end of the day, could we, as a Welsh pension plan, could we opt out of it, or is that not an option?
No, I think essentially there's two options, or two potential things we could look at. One is do we look at merging with another pool who might be FCA regulated already? Could be an option, I guess. They've already built the framework. Or as the fact the consultation identifies that Wales is different, is it an opportunity for us to say, look, we recognise we're different. If we can meet these minimum standards you expect, how about you leave us to it to carry on and do what we're doing on our own, acknowledging the fact that you put it in your consultation that we are different in Wales. So I think there's the opportunity of here to look at it ourselves. And ultimately, if it doesn't work, if we can't make it work, there are other options, which might be merging with another pool who's already FCA regulated, for example. But there's risk attached to that, as well, as the chair rightly says. Do we become, because we're a small fund, we need to make sure that our voice is still as equal in these sorts of discussions.
Yeah.
So I guess those are probably the two approaches that are probably most viable, I think.
Yeah. Okay. Yeah. Thank you, Chris.
Karina?
Sorry, I just wanted to ask Peter why you think this is good for Powys, why this presents an opportunity.
It keeps our Wales, and then for investment into Wales as well. We won't be swallowed up. I know it's 25 billion is not a big amount of money, and if we join another pool, I had that meeting in this the scheme advisory board. Roger, the further east you go, it seems to be more political, and they'll be fighting where you'll be putting the money, etc. Investment. I think it's fantastic for Wales to keep us as a Welsh pension partnership, and we'll be able to, where we see opportunities, invest in Wales. And as I said before, Powys is a baby, we'll be swallowed up. But at the moment, I have equal say over Cardiff and Swansea, as well. We are 8 equal chairs, even though we are very small. So I think it is the best way forward. When I see, especially after I had a meeting with the scheme advisory board, I can see we were way forward as a pool, really. But we just need to address, we ought like become an FCA. There's a lot of work to just change things slightly.
Yeah.
I can't see any more. Is it all right with you, Karina? I've lost you.
And you lose control if you have a FCA on the top and the pooling. It's all ways of losing control.
Not necessarily, but
Not
it's
at-
it's a different framework that we'd have to operate
Okay.
under. Yes, yeah.
Thank you.
Okay. Adam?
Thank you, Chair. So I'm just checking on process first, and I've got a technical question. So process is, we're here sat today. We know there's a tsunami of change coming. It feels to me that the done deal is that there will be something that changes. There will be this. Okay, that's rolling across the top of us. Process-wise, how much are we allowed to discuss today? When you're already saying there are things that you know that you can't talk about in this forum, are you planning to convene us to talk about those things? Are they relevant to us? Because we're playing catch up. Chris, you're in the depths of this, as you are, Jane. You know, Peter, you're. We're playing catch up, and there's a limit to how much we can do in a relatively short time. So, just my first bit is, I have a second question in a minute. Process wise, I'm not equipped to comment here today because we know only 1% of what you know. Yeah. Is there a plan to bring us up to 10-20% knowledge and then canvass us, or are we just along for the ride? I don't mind, actually. I'm not saying I want to be involved.
No.
I don't want to work at Christmas.
We had an informal session after the last committee meeting, the meeting that we had at the end of, was it meet or train? I can't remember, a couple of weeks ago, Adam. Unfortunately, you weren't able to make it. So we had an informal debriefing session after that. So yeah, we'll keep you updated throughout this process. Obviously, it's right. In terms of process, there will, depending on how it goes, almost certainly have to be some changes to the agreements between entities. So at the minute, we have an inter-authority agreement between the council as the administrating authority and the Wales Pension Partnership. So whatever happens, whether it's a Welsh pool or a merge with another pool, there'll be some agreements that need to happen. They will likely have to go through the council, full council, like the initial inter-authority agreement did. So in terms of process, council will probably have to agree it. In terms of updating you, we'll have to do it outside of public forums, but at the right time, obviously, we'll be able to release the information publicly when we can. But yeah, we'll have to think about how we schedule in some catch-ups.
So my broad then, sorry, response to listening is given the fact this change is coming, our preferred one is to retain the Welsh identity and thus wrap ourselves in FCA regulation, yeah, and all the things that go with that. And Peter, that's what retains our current voice, as I understand it, and that is a nod around the table saying that's our preferred option, and that's what we're going to work in terms of your responses, Chris. That's what we're pushing back into the.
I think it's an option. I think, and it's right for us to look into it. Absolutely, yeah.
So but very quickly then. So I read that as option, our preferred option, because doing nothing is not an option.
No,
by the sounds of it. Our preferred option is to make the case for Wales, agree to being regulated under the FCA, and go with that. And then the option behind that is merge with another pool. Is there a third option that sits in there?
I think the preferred option is if we look at option one, as for example looking at Wales, then we're in control of that. If we do nothing, then we'll just be merged. Something will happen to us, and that's something that's outside of our control, and we don't know what that might be. So in terms of the third option, it would be another, but we probably would have little control over it.
Ultimately. It would be another as imposed on us by the UK government because they were not satisfied with our. And if we chose to into option 2 in merger, have you? Is there a sense of where our preferred partner would be if we were?
I don't think that's something that we've got into the detail of yet, Adam, or even I could probably discuss at this part. To be honest. No.
Okay, noted, understood. Okay, thanks.
Thanks, Adam. Jane?
Yeah, I mean, some of what I was going to say has been answered. I think when we talk about opportunities for Powys, you know, at the size of our fund, we've seen the benefits already of being involved in that larger pool as the Wales Pension Partnership, you know, sharing costs, doing those types of things. We've seen the benefit of that. And when you've got bigger amounts of investment, you know, that opens up doors that we wouldn't necessarily be able to do ourselves. So I think from a pooling perspective, what we've done already, and I suppose there will be further opportunity from that perspective here. I mean, we are working through this, as you all appreciate, really, really quickly. The detail, every weekly meeting we have, we're moving in terms of another another piece of that jigsaw puzzle. So I think it's absolutely important that members are able to attend when we do have these informal briefings, so that we keep you as up to date as possible, because there is so much, the speed at which this is going is critical. I think if you're unable to meet or make some of those meetings, you know, we'll need to have that catch up with you to keep you in the loop as we move forward. So it was just that, really, because in order to achieve those deadlines, and albeit, you know, the consultation process is still ongoing, but it's just, don't underestimate how quickly this will have to move if what's being proposed is where it does eventually go.
Thanks, Jake. And some of this will have to go to Powys County Council through the Chamber
Absolutely.
Full Council.
Absolutely.
So we've got to try booking slots already to accommodate this, to move this process forward. Adam?
I just wanted to draw out from your point you made there, Jen. It felt like there was a tension in our strategic planning here. You made the point that obviously there were advantages to us as Powys in joining the Welsh pension pot and pooling. And if I follow your logic, there then are advantages to us in being part of a larger pool. We get economies of scale. But I just want to balance that with Peter's point, which is we lose identity and we lose voice. So I don't know whether you want to say a little bit more about where's the sweet spot between those two things. And I assume the sweet spot is we like Wales, so just to stick with Wales. But if I followed your logic, Jane, you might say, well, actually, financially, we'd be better off in a bigger pool. Yeah, and that's a fiduciary duty to our members to get the best return.
Can I help on that one?
Good. Yeah, carry on, David, and I come in. Yeah.
It was going through my mind the same. The logic in Adam's thought process was going through my mind, but the options there, it would be a lot of work to make the Wales pool into an FCA, but Hymans are telling officers that's possible in the timescale. It'd be challenging, but possible. The other option of merging, you really have to think first, would they want us? The options out there are places like Central, perhaps, geographically adjacent to us. They've got, I think, about 8 LGPS funds in their pool, but all of those funds are bigger than all of the ones in Wales. They would not look at us as equal partners, as do our partners throughout Wales. So going forward for a merger with them, I can see a huge loss of control, a loss of influence, a loss of opportunity to set our own plans up, etc. So, you know, those in the centrally have huge LGPS funds, and they would not give us an equal vote of 16 around the table. And it's also, I think 8 is a good sweet spot in terms of the discussion. You think of numbers around the table, it does get, if you look at the London Civ, for instance, where they have 32 London boroughs, they've been squabbling for years, and it's just too many of them, really. So big is not always better. And if you look at the local opportunities, I think if we look further down today's agenda, there's opportunities to invest in Wales. I think it's in the closed part of the agenda, so I won't go into the detail, but there are investments within Powys area, which Wales Pool are looking at in terms of infrastructure, etc. So going into a pool which isn't defined as Wales, what would local become then, and what would the focus be? So I think that the choice of words saying that it's an opportunity for us, I wouldn't say, but there's an olive branch that's been extended towards Wales by the UK government that we can remain as Wales separate. I think in terms of managing risks, it's certainly prudent for us to grasp that olive branch and run with it.
Yeah, quite totally agree, David. Thank you for that. Did you want to add anything, Jane?
No, I'm ticking them off my list as David was saying them.
Yeah.
Thank you very much. No. Okay, is that right for that? Okay.
So this is
anything
just for
more to add,
noting,
Chris?
Chair. Committee happy just for noting, and obviously we'll keep you updated as things progress.
Yeah,
And it might
there's
be
a lot
quite
going
frequent.
on, and we'll keep you updated. We'll have briefings as well. Okay, are you happy to note this? Can I propose a second to note this report, please? Thank you, Hugh. Thank you, Adam. Are you happy? Thank you. Okay, item 8, the pension regulator code of practice.
Yeah. In the interest of time, Chair, I'm not going to take committee through this in any detail, but this is just to update committee that we're just over 6 months on from when the regulator launched their new code of practice. We've been through the new code, carried out a gap analysis, and pleased to say we're in a good place because of the work that we've done with the Pensions Board and the committee over recent years. There's not that many gaps that we need to plug, but the work around compliance with the new code is essentially around evidencing. There's a strong focus in the new code on evidencing procedure. So an example might be you carry out a certain procedure in the admin team. Where's your evidence to say this is why you do it? So we know we do it. It's sat with experienced individuals and workflow processes. The regulator's looking for a next level, really, which is documenting why you do it, things a certain way. So we've got all the processes in place in the main. There's a couple of things we need to do, like build our own cybersecurity policy. It's not acceptable to be reliant on the councils anymore. The fund has to have its own fund-specific cybersecurity policy, so work's happening on that. But other than that, we're in a good place. As I say, the work is being focused on the evidencing side of things rather than the actual doing. We don't need to actually produce many new documents. So that was all I really wanted to say. I haven't had much time to look at it since the last meeting because things have happened since then, which has taken up quite a lot of my time, which we've just been talking about. But my intention is to try and revisit this when I can to try and kick things on a bit further. But in terms of where we are, we're in a good place. I just want to give committee that reassurance.
Thanks, Chris. Any questions? I can't see any hands up. Okay, are you happy to note this?
Yeah, happy.
Thank you, Harold. Adam, are you happy? Thank you. Okay then. Item 9, it'll be Chris again. Wales Pension Partnership update.
Thanks, Chair. Again, this is just presented for committee's information. We've actually got the operator presenting to you, I think it's the next item, the first item when we go into the private session. So I'm not going to go through this in much detail because they will probably update you on that one. The usual quarterly papers are presented for you, and you can read the minutes at the last of the last meeting at the hyperlink there. In terms of performance, Russell Investments are also going to be presenting to you later on. Whilst it's in a specific part of the investment, they do present a performance update, and that's included within the papers here. So I hadn't intended to go into any more detail, knowing that we've got a couple of representatives from the pool in the next part of the agenda, Chair, but obviously I'm happy to answer any questions if committee want to go through anything in more detail.
I can't see any hands up.
It's a light touch. It's not my documents. It's provided by WPP really. So, but
yeah. Like not much. I think you've covered everything. It's a lot on the WPP today, isn't it? So, okay, are we happy? So I propose a seconder to note it. Errol.
Yeah, happy.
Thank you, Hugh. Thank you. Are we happy? Okay, thank you. Item 10. Are you happy to go into excluding the press and public from the meeting?
Yeah,
before we do that, sorry, I didn't mean to cut you off.
No.
Because I'm showing my papers, I can't see. Have we got representatives from Waystone and Russell with us?
Yes, we have. Yeah.
Oh, we have. Great. Thanks, Rachel. That's fine then. Okay.
For item 11, you mean, Chris?
Yes. Are we going into? Is it confidential?
Yeah, can we into confidential now? Well, wait for Rachel to shut us down.
Oh, see, Trish has got a question. Sorry.
Yeah.
Oh, sorry, Trish. I didn't see. Was it about the item 9, Trish? She's gone. Where's she gone?
No, sorry, I didn't mean to raise my hand. I'm sorry, it's a bit difficult because my camera's not working today.
Okay.
Apologies. Sorry.
Okay, Rachel, is everybody here? Should be here now. Who's not? There's nobody here that shouldn't be here.
Just bear with me, Chair. I'll just end the meeting for the public.
Thank you.